Hello, everybody. Welcome back to another episode of Palantir Weekly. This is a very special episode. It's episode number 161. And when you subtract 161 by 61, you get a number called 100. Quick maths right there. And 100 is also similar to the market capitalization of Palantir.
I saw him reaching for that bell, man.
What do you say?
I saw you reaching for that bell. I'm like, here it comes, man.
Here it comes.
Like,
we have been doing Palantir Weekly for a little over 2 years now, and we were covering the company when it was, I think, at its lowest $10 billion market cap, and now we are here at $100 billion. Pretty exciting, pretty awesome. We got a lot to talk about, a lot to dissect. We had an L3 Harris partnership this week. We'll talk about that. Karp was on CNBC. He had a bit of a epic segment there. We'll talk about that. And also, Karp is coming out with a book, so we will be talking about that in terms of what that means for the trajectory of the company. Let's start off with $100 billion market cap. I want to get your raw thoughts, and then we'll go deeper into it. Dom, let's start off with you because you haven't been on the show in a while. $100 billion market cap, what does it mean to you?
Means that we were right. I mean, it's just the beginning, though. Like, I know we're excited about this, and it does feel good. I remember when we were at $6, and I was like, when we get over 40, it's going to feel really good of when it went DPO and went to 44, and we crossed over 44 and into 45. You know, as Karp said this week on the interview, I mean, everyone doubted them for multiple reasons, from profitability to stock compensation to everything, from their business model and forward deployed engineers. And they chose to pool party at Dom's. Yeah. I mean,
especially if NVIDIA keeps doing its thing, you're hosting a lot of us.
Yeah, man. Yeah. But it's just the beginning, and they were so far ahead of the game, and they said it. And I don't think even we really understood to the level and extent of when Karp said, we're building things that you won't realize you need 5 years later. And here it is, you know, we're 4 years later, and things are really moving along and transforming.
All right. Amir, your thoughts on $100 billion market cap?
you know, I would have prepared a chart, but Arnie keeps making fun of me. I don't know if you caught them while in India, but I was making these charts in Excel. No, I mean, it's a huge stepping stone towards that 1 trillion, which I guess we all now are starting to believe more and more is actually not only possible, but starting to turn out probable when you look at the business trajectory. And, you know, it might perhaps be a quarter or two premature in terms of intrinsic value, but I mean, this company is truly special. And I don't think even the ones that follow it like daily, like we do, truly grasp the potential of the business. So it's been a fun journey and very educational, I think, for most people that follow Palantir. I mean, there's so much to learn in terms of investing, in terms of tech, in terms of the trajectory of AI. So yeah, it's been a blast, and well done, Palantir team.
Arnie, your thoughts?
But typically, it's hard to judge the quality of an investment in a relatively short period of time. But when the degree of the performance is so strong, it's hard to say, oh, well, I can't say we were right. Because what we really saw was a story. Like we spoke about this much time ago, that we were looking at that little girl in the movie that you see it has a lot of potential, but at that point nobody wanted them, and then goes to a party, but very well dressed up, like showing off her full potential, and then suddenly, boom, everybody wants her. That's the how I call it, the prime time.
Yeah, it seems like Palantir is in its prime time, and at least over the past couple of weeks, as more and more people have been rushing in to buy Palantir, it also feels like they are starting to show off the goods that they have, and the market's starting to recognize that. I think there's a lot of emotions here at $100 billion. Part of the emotion is it's part of a pretty astronomical run. So it's not one of those things that, yes, if you've been here for a long time, you've like waited for this moment. But if you got in even a couple months ago, if you like joined the Palantir story a couple months ago, even a couple weeks ago, you're like, oh, cool. That's why I expected it to like go up a little bit more than what I bought it at. Versus if you were buying it at 6, 7, 8, I mean, it's just a totally different company since then. And what I think is really interesting here, and this is what I want to get your thoughts on. Karp did an interview back at the Davos summit in 2022, where he talked about the fact that Palantir was, in his words, obviously overvalued at $40, which implied like $100 billion market cap at the time or close to it in 2021. Now he was on CNBC. We're about to listen to a segment in a second, and he was critiquing people essentially that called Palantir overvalued. So, Dom, the question to you is, what do you think is the difference in Karp's mind from 2022 when he was acknowledging the obvious overvaluation versus now where he's acknowledging the actual undervaluation, even at $100 billion market cap?
I think it's the demand. The demand is outrageous. I mean, they have to really be picky about what customers they take on and onboard and what they can actually keep the culture, keep the business model intact without oversubscribing to too many customers at once. As they continue to hire top tier 1% talent, they'll be able to onboard faster and scale faster. But I think now it's just the matter of the confidence, knowing that the validation is not only there, but they're getting to be a lot more picky and choosy of who they bring to the table.
Yeah, I agree. I think demand is a big, big story, especially U.S. commercial growth reaccelerating, which I think in Karp's eyes justifies a much higher valuation than 2022. Amir, your thoughts on Palantir hitting 45, which I didn't mention, but it's obvious. We hit $45 today. We haven't hit that level in over 3 years, a new all-time high today. What are your thoughts on how Karp thinks of the valuation of the company today versus 3 years ago?
I think the quote is that I didn't feel that we are that good at 40. I don't feel that we're that bad at 6 or something along those lines. And the business is not the same as it was in 2022. Now, for someone like me that does valuation for Palantir, you kind of need to see these enablers and these drivers for the business into the future. Like AIP did not exist in 2022. And Palantir did not have this obvious go-to-market, the scalability that they do have today. So it's obviously not the same business, but you can see that they will find a way to solve that. And that's what we are essentially projecting for the business, even back then. So I completely understand that he might have not have felt that confident at 100 billion while they're doing like $1.6 billion of revenue at that time, or even less in 2021. And yeah, it's a completely different business. There are new levers to pull for them in terms of growth. I mean, everything is coming together. All the pieces are to the puzzle are like being slotted in place. So totally makes sense that it's a completely new outlook for the leadership.
Arnie, your thoughts on why Karp thinks they are probably not as overvalued as they were in 2022?
Look, I think what we are seeing is literally the perception change, because also the dynamic completely changed. And the big picture is Palantir went from being the underdog company that was kind of shady, controversial, nobody really wanted to talk with, to the star of the moment. Now, everything Palantir touches somehow is a story of success. We saw, for instance, Ukraine, drone accuracy went from like 50% to 80%. Then we have new partnerships after new partnerships. The company itself delivering both to customers and to herself. So while it was actually true that Palantir was overvalued back then, now what Karp sees is probably, as you mentioned, like the highest demand for Palantir itself and its product that he has ever seen. So that he realizes, okay, maybe the price could be high right now, but people now still underestimate probably what we are seeing in terms of number. Like I found this comment on Reddit. Now I'm not able to share the screen, but it's like I work for a major defense contractor, And I can't tell you how many times partnering with Palantir on technology gets brought up in the executive leadership meetings. It's only a matter of time before the other juggernauts in defense follow suit. So it's like Palantir, now, oh, Palantir, I want that too.
Yeah, and I to that extent, I also saw some posts on X where people are like hijacking Chad, like in the middle of a conversation, like, dude, we have launched this business. Can we please come to an AIP bootcamp? We really want to attend and like scale our business. Like, people are really starting to show interest in Palantir solutions.
That's all I was gonna say is I'm not so much caught up on the technicals. I know that's the world that you guys live in, and Amir and Arnie in the finance piece. But from a technology standpoint, everyone on the chat, go see Andy's video of how he built a learning language engine platform on AIP. This is a guy, an engineer who works at Palantir with Chad, and took AIP to teach himself German. And he does this with 6 AIP multi-model agents. And it literally provides the feedback as he's doing his tests. It creates the homework, sends it to him in automation. He does the assignments, and it grades how he's doing, focuses on the areas of strength, where he needs to improve. And he goes into his AIP portal every so often just to see how he's progressing and learning. And when you think about the automation and the use case of any of this, Palantir actually demonstrated that this week on a customer service engine product demo on LinkedIn this week of a multi-agent solution, and how you would call as a bank, like as a person who their credit card's on hold for fraud, but it really wasn't fraud. It was just they were in France buying something, and it goes through and automates all these different things and efficiencies. This is where the future is going. If you don't have a solution and ontology that can actually consolidate all of that data, as Chad says, and bring it all together, and then provide the automation, because data is getting more and more complex, that if you're not able to do that, then you're going to be left behind, because there's going to be companies that really take this to the next level in automation and profitability. And this is the core. Like, this is the operating system that Windows was in '93 is what this is to what AI is now.
One guy by himself disrupting Duolingo. Let's go short Duolingo, fellas.
It's pretty incredible.
But look, this that you said as a joke is not really a joke, because if
it wasn't.
If you can really build something that is like the core feature, so it's like the core product for another company, but for AP is just another module, a fun experiment of a guy wanting, oh, I have this problem, let's try to build a nice engine in a couple of hours. I mean, that potential is just immense. Like, entire businesses could be disrupted. Now, obviously, from here to there, you need to build a business. But the idea that what is seen as like a strong moat, irreplicable moat for many companies, and you realize, oh, I spend a couple of hours or days in an IP and I can build this exactly the same engine. That's something strong to pay attention on.
And that's why they're investing on the developer community.
That's why we have DevCon coming up as well. It seems like the use cases are exploding, and as a result of the use cases exploding, Karp seems to have a lot of confidence about what's going on right now, which is why it's time to take a listen to what Karp has to say. We also have Mr. Matt Money joining us today. Matt, you're going to be first up with reacting to this clip.
Palantir, third best company, third best performer in the S&P 500, even though it's a new entrant. A lot of analysts don't necessarily fully understand, I think, what you do on all aspects, but investors certainly seem to get it, particularly on the commercial side. I realize there's been a re-acceleration in the U.S. government business, but the commercial business is really what's propelling the stock. What are you seeing, especially as you do have these artificial intelligence platform boot camps and adoption levels?
Well, look, I mean, first of all, to your first, intelligent people learn from their mistakes and learn to realize when they made a mistake in the pattern. Everyone else becomes an analyst or an advisor. So, people have been saying we're overvalued for the last 20 years. People have been saying our products would make us profitable, that we would not be able to become a juggernaut, that we would not become GAAP profitable, we would not get on the S&P. And, keep saying that about us. We love it. It discourages people from doing anything like what we're doing, and we are winning. Now, why are we winning in U.S. commercial? Because we learned in the government that what makes AI valuable is the ability to manage algorithms or large language models. Every financial analyst wakes up in the morning, and with notable exceptions that we really revere, wakes up in the morning, and after they stay at Motel 6, they have a huge opinion about how to manage large language models. It's completely theoretical and idiotic. If you want to manage large language models or AI, the infrastructure that allows you to manage them is where the actual value is. The large language model is essentially a commodity that you can value and use depending on cost and veracity. And they completely don't get it. But you know who does get it? Our commercial American customers. And despite the fact that we barely have a sales team and that I'm providing my pontifications of truth, including America's a great country, which many of them don't like, our allies deserve protection, Israel is in the right, whatever is pissing them off, they're still buying the product. And the reason they're buying it is because our ontology and our AIP allow you to deploy and use AI in a way where it changes your margins, it changes your go-to-market, it changes your ability to kill or take out adversaries in a much safer way with much lower costs. And American companies are dynamic and interesting and run by some of the best people in the world, some of whom are much better at partying cooler than you'd ever imagine on TV. And they adopt. And so, it's like, do you want to believe what the librarian says about a book, or do you want to go out in the world and see if it works? And we are in the business of making our commercial customers work. And sure, yeah, we have a ton of player haters. Keep hating on us. Yeah.
Okay, I was going to say, final question for
so I'm gonna let Matt go first on this, but the pure energy of those 3 minutes. This is a guy who he's so successful. And he wants more with this energy, because you got to wake up to have that level of energy and speak like that for 3 minutes and have all those little bars that he's dropping. Honestly, it sounds like a guy who's ready to guide for even more reacceleration of growth in the company from what we saw in Q2. I thought that was an epic take. I thought he was basically giving a shout out to all the little guys that believed in Palantir before everyone else believed in Palantir, primarily based on this idea that a lot of the analysts have consistently said something about Palantir and have been wrong. And if they just keep proving people wrong, then this story looks like it's going to keep continuing. Matt, what was your raw reaction to what Karp had to say?
So 3 things before I react. Happy early birthday, Mitt, on Sunday. You're the man, the myth, the legend. Second, it's been nice to come back after a couple weeks off. So good to see everybody. And then thirdly, it is really nice to see Karp like that, right? I mean, it's really phenomenal to be able to see somebody with so much passion and enthusiasm for the industry, because so many times these days we are so focused on being polished and being like, seeming like you're better than somebody else. And very rarely these days do you actually get somebody that has boots on the ground and actually wants to do something. And so it's very enlightening to be able to see, these Palantirians going across and not really trying to dress up all fancy and put their elbows out at the table. No, they're literally at their desk doing whatever the hell they need to do to make sure these American companies get the gains and the actual alpha that they deserve. And so it's so unusual, and it's so unlike any other company I've ever worked with. It's just phenomenal to be part of a company. It's nice to see that I was recognized on the ground floor 6-7 years ago when I worked with these guys. I was like, this is something different. I need to be a part of it. And to be able to recognize that these guys are doing something, like, because everyone at the time, let me take you back 6-7 years ago. Every year at the time, we need to worry about data management. We need to worry about digitalization. We need to worry about making sure that all of our data is searchable, in the right categorization, etc. And you had all these people, whether it was in India, whether it was in Turkey, whether it was in Europe, whether it was in the Middle East, whether it was in the Gulf of Mexico, wherever else, talking about different ways to get this shit in the right order. And then you had these guys with, their vests come in and legitimately say, what do you guys need to get done? What the hell can we do to make it get done? And they asked us about 1 billion times. And at first I was like, these guys don't know what the hell they're doing. Next thing you know, it's saving us literally, I don't know about billions, but definitely hundreds of millions of dollars in lifting costs. It just goes to show you the need and the hunger that Americans have, and American companies specifically have, and maybe even international commercial customers, as he alluded to, need and are tired about this lackadaisical effort that Microsoft's of the world and many others are putting out there to have just off-the-shelf sort of software that isn't custom made. And it goes to show you what the next 21st century software company looks like. And this is something I've been touting on this channel for the past 2 years. So appreciate, once again, coming back and being able to be part of something great, Palantir Weekly. Thanks, guys.
Yeah, it was exciting. It was really, really, really exciting to see Karp get into that zone. And it definitely seems like he is continuing to want to spread this message out into the world, which is that it's okay to hate on Palantir because it creates a source of motivation that is like the foundation for everything they've always been, which is anti what other people think they should be, but just trying to be authentically themselves. Amir, what was your reaction to that rant by Karp?
We recently did a one-on-one interview, me and you asked me what I think about Karp, and I very bluntly said that, well, I don't always understand the philosophical Karp, like in his letters with his fancy words that are way beyond me. But I always enjoy savage Karp, and we do get that part of Karp very frequently as of recently. Have you guys seen the Reaper meme of Karp knocking on doors like, we can't scale, we won't ever be profitable, we won't join the S&P 500? It's amazing, and I have a feeling that there will be a lot more doors added to that meme throughout Palantir's history. And to think back like a year and a half, it's really laughable that people were calling for Karp to be replaced just a year and a half ago. Now, in terms of the recent outspokenness or confidence, you could take it two ways. I think it's probably like same as the presidential odds, where he's projecting confidence just ahead of the quarterly results because he truly believes that they are great. Or it could be that he's projecting confidence to come over potentially weak results, but to keep the momentum going, like to think of the bigger picture. And that's why he's projecting this, like, you always doubted us, but look over the long term what we managed to accomplish. So I think there could be two sides to it, but knowing Karp is probably like legit confidence. And I would say that similarly to our two candidates in the US election, the odds are probably similar for either option, where the good results are similar to Mr. Donald, I would say.
Dom, your reaction to that segment?
It was just pride as being a shareholder. I mean, you didn't even have the whole clip where he talks about just being a patriot and being on the offense, right? I do believe
we can watch that clip after as well, too. Yep.
I was just so thrilled. Iliano said, hey, it's coming up in 15 minutes. I stopped what I was doing, got ready to watch that. And you just see the conviction, right? Like, I'm telling you, I've worked in SaaS and infrastructure for 20 years. And I'm telling you, there are very few founder-led CEOs that truly are authentic and that passionate after so many years. There's a big moat just in the culture that he's built in general.
I agree. Arnie, your thoughts?
Look, when Karp starts to talk, and just before talking, you see him moving like that. I was
gonna say, something. He's getting ready for something. You know it. That's like him warming up.
Exactly. That's the move. That he's like now I'm ready to explode. But breaking news. There is someone commenting on CNBC right now because I felt hurt by some assertion. we will join Rishi from Model 6 in a minute.
Rishi is a fun one. I mean, it's also, I think Karp was kind of calling out people like Rishi as well.
Well, there's the picture from.
I think that's exactly what he did. If you look at where he called into CNBC from, like the last time.
This yeah, you guys are right. Yeah.
So I think this was like a nice call out about.
Oh my God. So hold on. I actually didn't notice. I didn't make this connection. Rishi literally looks like he's in Motel 6 from the previous times he's been on CNBC. And so I actually didn't notice this today. Wow.
So this is literally the first results that appear when you search for Rishi and Palantir. But what
That's
we
hilarious.
are
That makes this so much better. I did not know that. Wow.
Like as an analyst, a past analyst myself, I love blasting analysts because it is so true. It's like your job is to have a strong opinion on things even when you don't really understand them, because you can't write a report saying, oh, I don't really understand this. So as an investor, if you don't understand something, it's fair to say, oh, you know what? I have no idea about Rocket Lab. Like, I appreciate the company, but I literally have no idea. If you are the analyst on Rocket Lab, you need to have an opinion and you need to pray that your opinion is right. But when it happens that your opinion is wrong, completely wrong, that's not a good impression for you. And Rishi is not wrong. It's like one of the worst things that could ever happen to to you as an analyst, having strong opinions while being completely wrong. So this is the moment for Karp to say, you know what? In the past 2 years, many people try to bring us down, but we are emerging now. And it's not only the stock, the people that cover our stock that are excited, but it is our clients that are excited. That sentence, do you know who fully understand our power? Like what our capabilities to deliver AI? Our US customers. It's like they are eating everything that we can have. So we went literally from Karp banging on the table because it was like the same feeling that we had. Like, we are sitting on something very valuable, but the clients don't understand us. The market doesn't understand us. Nobody understands us, but we will keep fighting. So this is the moment of truth. Palantir is finally being appreciated. And I think it is so cool to see Karp like taking a victory lap. But I fully align with Amit. Like, you don't go that way, that aggressive, especially on an analyst, if you're not sitting on something good. Now, the question if that something good is enough to exceed the expectations implied in the price, that's another topic. But I can argue that from Karp's body language, it is difficult, at least to me, to think that the results are not good.
Yeah, and so next week will be our final week before earnings, so we'll do our full earnings expectations next week. But I agree, the energy that he put up there, it's hard to imagine he's not at least somewhat excited about the type of growth they've been able to put up, given how much U.S. customer adoption they've been able to see as well.
Just quickly, it's still funny that to this day, none of the analysts are really swallowing their ego and admitting that they missed the bigger picture. Like, I think we have something like 15, perhaps even 20 analysts covering Palantir now. And none of them are invited to the earnings call, which kind of is a bummer, as we've talked about many times. But, outside of Mariana and Dan Ives, it's interesting that we have seen all of them across the board raising their price targets for Palantir. But if you read the note, they're all still very bearish on the business. Like, last week we got I forgot which bank it was. They raised the price target to like 30. They're like, yeah, but we
Mizuho.
still don't understand the company. They don't deserve to trade. Like when are they gonna swallow their ego and be like, okay, we approach this business from the wrong perspective. Perhaps we should no, they're like doubling down, and they're more focusing on like not making themselves look like fools, like Rishi, which like sticks to his guns. I guess he's just trying to make a name for himself the way that Gordon Johnson did for Tesla at this point.
But here's the deal, like with Rishi, like Lunar even called it out. RBC uses Palantir. The analyst who's bearish on Palantir, his company uses Palantir. So it's like, I wish someone would call this dude out on the carpet. Like, come on, bro.
Yeah, I think
the other thing is
does as well, and yeah.
Well, he's not upgrading this. Like, he could still be bearish, but $9 does not make sense.
I think Dom had another point. Go ahead, Dom.
No, I was just gonna say that he doesn't get it. He doesn't get, like, how are you a technology analyst? If you're gonna put a $9 valuation on there, then you obviously don't understand the technology and you don't understand AI. Because there's so much that they have a moat in that people are so many years behind. And if you took the time to learn the documentation, I mean, you can even just look at the growth, and the $9 valuation doesn't warrant. It just gets me fired up. It's like, come on, bro. Like, why is even anyone listening to you? Like, why is anyone having you on CNBC?
It's like 15x price to free cash flow. So it would feel like a company that has no growth.
Yeah, and the thing is, like, as you mentioned, Dom, these people are experts in the field. They are not stupid. So it begs the question, like, what is the actual agenda? Like, if we go back 2 years ago, there was a clear agenda that the people who covered Snowflake and who covered Datadog and Palantir, they had sell some Palantir and buy some Snowflake, like across the board, more or less. So there was a clear agenda, like, these guys went the IPO route. They made us a lot of money. Palantir didn't. So here we're gonna put a sell on Palantir and a buy on Snowflake, even though it was super expensive. And like, these people are not stupid. Like, getting a CFA is not easy. Like, getting a job covering this specific sector, like, you are supposed to be an complete expert on the field and topic. So I can't believe that they still, like, don't get it. Like, there has to be something more to it. Like, I refuse to believe that they just don't grasp it, even after covering it for years at this point. So it's really interesting to see what the reasoning might be. But I don't think it's that they truly are stupid, because these individuals are rarely stupid.
I refuse to think that the RBC doesn't have a single person that could make a better job.
Yeah, and the thing, again, going back to the argument about ego that you're making, Dom, is like, he can still be bearish and say, 25, 26, or 22, but to keep it at 9, now it feels narcissistic.
Yeah.
It's
like, I forget, because Gordon Johnson on Tesla, like, it's the same concept. It's like, come on, man. Like, my thing is, like, why is anyone giving these analysts that kind of publicity and listening to them? Other than, it's like, this guy's bat crazy. No one else is talking like that, And the only thing I can say is thank you, in the fact that you're helping keep the price depressed, because it's just allowing us to buy more, and you're helping me retire a little sooner. So I appreciate it.
Look, there are essentially two dynamics. Or someone is very dumb here, or if this is a sort of a genius move that actually embraced by the bank itself. Because one thing that we need to underscore, that's something we discuss with Emir, that the job of the analyst is not literally being right to make customers make money. Like, the real job of an analyst is get fees for the bank. And the way the analyst makes fees for the bank is just having a different point of view. So rather than just converging to the analyst consensus, for the bank perspective, it is actually better to have, like, a completely divergent opinion, maybe wrong, but at least is a different point of view, so that fund managers can call the bank and say, okay, but everybody now has a price target of 30. There is Mariana there with 45, Dan Ives with 45, no, Mariana 50, but still. And then a lot of analysts at 30. Why the hell are you at 9? Please tell me more, because when you are building an investment case as a fund manager, you probably listen not the guys in the middle. You tend to listen more to the extremes, and there is an economic value from the bank's perspective to being into that extreme. Just to give you a sense, a friend from university who has been a technology analyst told me that the moment that he had like a very aggressive short report on a company, and then it started to crack, then everybody, like all the fund managers, wanted him to make like a private meeting, very, very costly, in the thousands of dollars per hour. So that's how. I mean,
I was saying it's like being contrarian to get people's attention, almost like clickbait.
It's like exactly. It's like no different from strongman personal finance. Obviously, strongman personal finance is better looking than Rishi, especially when
he's not as good looking as you, Army, though. Yeah, you just gotta put that in context.
But
I think you're imitating strongman for those that don't know who he is.
But this to briefly explain that the incentives on Wall Street are very, very different from the incentives that we have as private investors. Therefore, we need to be very careful. Like, we need to think that there is value into listening to someone else's opinion, especially when it is divergent. But that doesn't mean that we need to blindly trust that source. It is just an input for us to elaborate more.
Yeah, I would agree.
So I have a question. I mean, do you think that aggressiveness, say the stock doesn't, because I'm just looking at the numbers, to hit 30% year over year is going to require, and I can back up the numbers in just a second. But do you think that if we miss and we actually pull back a little bit, people will be poking fun on headlines, being like, look how much he was trying to hype himself up and everything? Like, to me, as a shareholder that's been watching, it's easy to see, because if you think about it, even if they pull back to $35, how massive of an organization this is. It's still $70 to $80 billion market cap, and massively improving year over year in terms of revenue growth and customer ability to deliver for their customers. But my fear is right now the stock is priced for a 35% year over year growth, in my opinion. And I know, Amit, I think you're in the same boat, unless your opinion's changed as of a couple of weeks ago. But I'm just doing some quick math here. So we were at last quarter 678, and then last year we were at 558. And so exactly what I think you just noted, you need 725 to at least hit 30%, right?
Yeah.
And that is a 7% quarter over quarter on a pretty massive quarter already. 27% year over year growth from Q2 to Q2. So you need 7% on top of that. And Amir, do you have the numbers for getting to 35?
Yeah, so 754, which gives 35 year over year and 11.2% quarter over quarter.
Yeah.
So I think your question here is essentially, if we don't reach those numbers, which there's a decent chance we don't, this might not be the quarter for it, what does that mean in the context of the stock and the public perception of it?
More so the public perception, because the stock, regardless, in my opinion, even if it pulls back 10, 20%, I mean, we're still killing it, right? But my hope is that people don't shit on Karp because of, I guess, how high he's up in terms of, anyway.
Guys, a straight answer, please. What do you think the growth will be for the fiscal year 2025? Shut a number.
40. I think 2025 is the year we get to 40.
Okay. Emir.
So a year and 2 quarters out, you mean?
No, just 2025 guidance.
The fiscal year 2025.
The guidance.
No, like the final growth.
Like the
that,
percentage
we will-
year-over-year growth in 2025 from 2024. What do you think it is?
Okay, because like all all the story now will be into, okay, how much fast the growth will be, not now, not the next quarter, but 2025 means like a few quarters ahead, and that is where all the valuations will converge.
Yeah, so we know that the analysts are still stuck to their 20% year-over-year mindset, which is completely wrong, and we should be seeing a lot of revisions up. As for what I believe, I don't know. I think we are starting to redeem our AIP credits that we've been waiting for. So probably 35 to 40 for 2025.
I think all of us kind of have to believe to justify these numbers. Forget more multiple expansion for this $100 billion market cap that we're gotta be pushing 40%.
I'd say 35 to 40.
Yeah, so to kind of give some people some bookends, so we're still forecasting as of Q2, right? So I guess we'll get some guidance refresh from the guys in a couple weeks. 2.74 to 2.75. So basically 2.75 billion is still the fiscal year 24. To get us about a 20%, that gets you at 3.5 billion next year. To get you to 40 something percent, it's actually a little bit over 40%, but to get you to 4 billion, you're at 43% year over year. So I guess the question is to you guys, and I guess 3.75 puts you right in the middle of 30%. So
that'd be $1 billion a quarter, basically.
$1 billion a quarter, pretty much.
Woo,
Yeah.
baby. That's
Say that again, Matt.
a big
for
company.
For 35% year-over-year growth from year-over-year, how much do you have to do?
For 35, I have 43% is
Dom, I think he's cutting the middle between 35 and 40, so 37.5. It's round about 950 to $1 billion a quarter, essentially.
So 3.7 gets you to 35%.
And Dom, what about you?
Yeah,
3.7 divided by 4 would be 925 million a quarter, by the way.
That's wild.
I'm thinking between 30 and 35%.
I feel comfortable with that.
Yeah, okay. I think here's what you're going to start seeing. They're not going to change their business model based on what Wall Street wants to see from growth. We know that. They collect the funds on their large contracts when it deems necessary for the customer, because the business model is all about keeping the customer entrenched in the software as long as possible, to the point where there are no switching costs. That's why their top 10 customers are now over $55 million a year and keep growing 5 and 10%. So it doesn't make sense for them to take screws to the customer just to collect the full contract any bit sooner. If anything, them being so flexible with the customers, because they do have so much cash on hand, they do have no debt. I think 30 to 35% seems more reasonable. But what's really interesting is that there's going to be a point where they start getting these large government contracts collecting on the actual amounts that they're going to start seeing. And it's just so hard for us to actually model when they're going to do that, because they control when they want to do that. So not financial advice, but in a situation where you're running up to earnings like we are now, you could have two totally different scenarios happen. You could have them choose to collect some of those larger contracts and they show the growth and this thing goes past 45 to 50. You could also have it where they get to a certain amount of growth and it's just not enough of what Wall Street's excited about. They still have a beat and it actually pulls back 10 or 20%. So I don't, unless they start getting some much larger contracts, I think like a healthy 35 would be a very successful 2025 year.
So let's look at what people actually expect. Can you share the screen, please, Amit? Yeah. So our people, the community, still aligns with us more or less, because I made this poll asking, okay, what the revenue growth will be in 2025, and 40% of the people who answered see 30% more or less. So that's essentially the yardstick that investors like us have in mind. which means that if growth goes to 20% as analysts expect, that would be a disaster. But there is still hope for something more. And actually, thinking that 45% of the people who answered this poll expect at least 40% growth, that tells us that, okay, like in reality, a very big chunk of the people expect the 30% growth to be exceeded. So that's something to keep in mind. But one angle that I think is important to notice is remember that the net dollar retention for Snowflake is actually very high compared with that of Palantir. And one thing that I keep thinking on is that slide where Palantir was showing that the ontology was essentially priced on consumption. And if it is true that clients keep building new stuff on Palantir, connecting more and more sources, essentially expanding, I could see Palantir net dollar retention eventually converging to the very high growth rate that Snowflake showed in the net dollar retention. There, obviously, the basis was relatively low. So if you have like so many clients, but you charge like, let's say, 50,000, then going to 80,000 is not a big of a deal in terms of like for the company per se, but in aggregate numbers, like you have like a very explosive net dollar retention. I wonder personally if the consumption-based ontology pricing would be enough to bring us there.
I actually have a question just that ties into growth for everyone open to answer, because what we have been seeing now is just pure organic growth without any major operating expenses. It's been fairly static for 4 years or more, which in and of itself is super impressive, and that's driven up the operating margins really quickly. But when will we see that department of offense that Karp said in his recent interview? Like, when are we going to start deploying cash to pull on that growth lever? And maybe perhaps for Dom, like, where can they really put money to work in order to grow? Because they've many times mentioned that they're not really cash constrained for their growth. And we are seeing that, like, they are increasing their growth without any expenditures associated with that, because they have a really efficient sales strategy. But when do we see that growth lever being pulled, and what might that look like? So primarily to Dom, if you have any thoughts on
what and Chad just joined, so I'm gonna pose some questions to Chad on this. I've thought about this a lot, and I don't see them, unfortunately, as a sales guy here, I don't see them investing a lot in sales. And when you have amazing engineers like they do, like Chad and company, who have a personality and know how to relate to customers, if I am Karp and Sham, I am doubling down on investing in high quality FDEs and people that can lead boot camps. But at some point, they have to trust the channel and figure out what are those channel partners that they go to market with that then allows them to open up scale faster. I think the North Slope Technologies and the Ontologize and those type of companies that are former led Palantirian FDEs that now are CEOs, that could be maybe why they've done that. And maybe that's the way to do it more affordably. But I just think they got to trust enabling more people to train out boot camps and have that same level of expertise that our native homegrown Palantir engineers are. I don't know if Chad would agree or not agree, but at some point, the developer channel community has to grow fast.
I remember we had a conversation about events back then. To think they are deploying cash in the right way by building events, or there is something that from your expertise in tech you have seen and you wish Palantir could replicate?
Well, it just I wish I could have this conversation with Chad, because I think the reason they're not doing this is because, once again, what's so special about their secret sauce is their customer experience, that they learn the customer's business and learn those problems intimately and then solve them with the product so quickly, especially now with AIP, that if you were to take them and throw them on a stage on AWS reInvent, which is a very popular conference, or RSA, I mean, the demand would be overwhelming. And the problem with that is you have to keep this high quality level of service, support, and expertise. And if you don't have the head count to support that, you can spread yourself too thin. And you can also, they vet their people so well. It is very hard to get a job there. So I just don't know if they can do those big events, Arnie, in that fact of, just because that could degrade their quality of service.
So if I'm understanding correctly, like the risk of getting too much visibility right now
Yes.
at AWS stage
Yeah.
would be that it would be beneficial only under the condition that you have like enough people that you can dedicate to a potential demand explosion, because otherwise that would be detrimental to your reputation, because you can't keep up with the promises, right?
Yes, because once again, they're doing the business model on their terms of, there's very few companies in our world, especially in tech, that grow over decades. When I say plural decades, at double-digit growth. Their technology is designed to do that and be so sticky, and they're so fiscally responsible that they can outlast. Like when Amit said, well, what if they go to 20% growth next year? If some reason they were not getting all the growth that they wanted, or they were focused on their big customers, we would get great buying exposure and great pricing. But do I think that changes my thesis on the business? Not 1% at all.
Yeah.
That technology, I've dug into that tech so much and understand like what they're trying to do. There's no competition there. So I think they're just going to keep steadily growing.
Yep.
And they're just going to keep building and building. And Matt can attest at his company, there's always new use cases that you can find. And what I'm seeing, I'm just getting fired up because that video was just so awesome.
Get him, Dom.
It just, you don't need to buy a Workday. You don't need to buy a Salesforce. You can actually start replacing these multi-million-dollar SaaS companies and solutions that your enterprise is buying. And you can actually have almost all of that on the ontology and AIP, and you can find those use cases. So they don't need to rush, I guess is my point, Arnie, is that because that's the one thing that I could see them do, is overexpose themselves to not be able to deliver that great Palantir white glove treatment that they do.
And that's important because Wall Street obviously wants them to rush because they've given them a big multiple. But if they take their time, which we're seeing Tesla do that right now with Robotaxi, it just creates buying opportunities.
Yeah. Why did Elon have to rush? He doesn't have to rush. He just needs to get you excited about, okay, it's coming, but it will happen. Like, if you understand the technology, you have and you're patient, you have a huge advantage over institutions.
The thing that we still can't quantify is how much free Palantir usage is still being given out to countries for trials, to many organizations as kind of a key step in. And to be very honest, I wouldn't be surprised if there's many more countries that have yet to hit the government space. There's many more countries many more companies that haven't hit the commercial space. And honestly, as an investor and as somebody that isn't planning on selling the stock anytime soon, I would honestly love to see how many free customers have it, because I just know in that case, that majority of the time those customers are going to stick around, and eventually they'll be worth $4, $5, $10 million, $20 million. And so if you're able to continuously think and say, hey, there's 300 customers that are currently using the product, and you set up a retention rate of about 80%, then you could say, okay, well, 240 customers times $4 or $5 million a piece, that's another $1 billion, $1.5 billion worth of revenue that we haven't even accounted for yet, that in reality is going to be coming down the pipeline likely within the next 4 years. Well, boom, that alone is a 30% jump in revenue, if not more, that we haven't even built in. And that's not including the net dollar retention that we normally get, which is also climbing back up into the mid-teens, 110s rather. It was in the 109, 108 range, and now it's starting to kind of turn the corner again. So I think what we're still seeing, and what we have seen, is we're still seeing a lot of the usage of what Palantir, not anymore, but what I think we're seeing is the hangover that Palantir had with all these customers during the pandemic, that because everyone was using Palantir to track during the pandemic, and people were like, yeah, we're using Palantir, but we're not really like doing anything with it. So there's this customers that had to eventually stop using it. That probably was a big contract. If you think about it, it was literally worldwide. They were tracking a pandemic, and in that respect, that hangover and revenue growth has now been fully offset, in my opinion. That's why you're probably starting to see the revenue go in the opposite direction, coupled with the great work with AIP and everything like that, right? I'm not saying we're trying to devalue or discount that, but you have to think, I mean, I don't know. That's just the way my mind thinks. But I honestly, I agree with you, Dom. I wouldn't mind it going back down to 20% because I believe in what they're doing, right? I believe not necessarily from like a America First perspective, but literally from a software perspective, and how they literally built it in front of my eyes to be able to change. And they do that not only with just oil and gas, they do it with cars, they do it with airplanes, they do it whatever you need. They'll get it done.
Said it. He said the customer service engine AI agent, it'll be what cracks them in. Go watch that webinar. I'm telling you, like, speed to value. It's all about being in this industry. When you build software to prove quantifiable ROI, that is what gets you POs. You want to get a multi-million-dollar contract, show a CEO that you can save him millions of dollars and prove it and guaranteed show it and demonstrate that, you're going to have a customer for life. And that's what they've shown. They're not selling slideware like he says. And that example of just speeding up the customer experience on getting your bank unfrozen on your credit card, the use cases of having multi AIP agents that are automated and can talk to each other. It's like, dude, there's so many use cases, so many.
Yeah.
I just have a quick one to Arnie before we move on. Amit, sorry, he's been wanting to change the subject for 40 minutes.
Sorry about that. I've been talking too much.
No, you're good. You're on fire. We love it.
No, we all have. Just quick to Arnie. I just want to elaborate a bit about how we should be thinking about net dollar retention, because I have some thoughts, but I'm really curious to get your superior analytical view on it. So how should one think about NDR? Like, is it required to have net dollar retention in line with top line growth to have sustainable scaling? Or what figure are you really looking for to say like, okay, this is very impressive for Palantir to keep up this net dollar retention?
Well, the net dollar retention as of today is 115%,
114.
Okay, more or less there, which intrinsically means that the customers prior to the the customers that we had 1 year ago, before essentially AAP, expand the usage of Palantir on average by 14%. That is good, but if you really want to express, okay, this is very good, you want to have existing customers expand on average like 20-25%, because that's the way you can keep capitalizing on essentially the clients you have. Like, getting a marginal client is much more difficult theoretically than expanding an existing one. And that gives you already like the boost of a growth. We need to think that the total growth is always the sum of the existing customers expanding and the growth coming from new customers. So when a client jumps in in the first year doesn't enter in the net dollar retention calculation. It enters in like the new client's revenue. And what we have been seeing so far is that the new customers jumping into Palantir are starting with Palantir like already at a very, very good good budget. So the growth that we are seeing accelerating right now is not much due to existing customers prior to AAP expanding substantially, but is driven by new customers that are excited to jump on board and rapidly expand in the next few months. But it means that there is still a big potential from existing customers, so prior to AAP, to expand substantially.
Okay, I asked the question wrong. So what I was getting at is the dynamic between this whole, as you mentioned, the most recent quarter, we had a record amount of clients signing up deals for 10 million or more. And that's what gave us like this huge explosion. And that's why the average contract size actually increased for the first quarter since they started reporting. But what I was getting at is that Palantir now for a year and a half essentially have had this take the whole market approach where they didn't really think about pricing. So what I was getting at was that we have now passed a year and a half of AIP. When are we going to see that scale out of those customers that sign on early when Palantir didn't really have a pricing strategy for AIP? And when are we going to see, because that's going to be reflected in the net dollar retention. So what I was getting at was, what kind of net dollar retention targets do you have with that in mind, where they didn't actually focus on monetizing fully for their clients over a year and a half ago when AIP launched, but now they're actually, it's not a proof of concept, like they actually deliver value today, and they've proven it now for over a year. So when should we start to expect to see that net dollar retention range to go up to back to the 120 and even 130? Is like the first quarter they started reporting net dollar retention was in Q4 of 21. And at that point, it was at 131%. So my question was more like, well, I was hoping you would answer about AIP, but now I clarified it. So do you have any like ranges? Because you can think about it traditionally in terms of SaaS businesses as a whole, but there is no comparable to Palantir in terms of the SaaS world, where they have a similar strategy where you can really compare net dollar retentions and say like, okay, this is good, this is bad. So that's more the gist of my question.
For, let's say, for a Salesforce, which is already almost a monopoly, already like insanely big, like something like a 10% expansion would be great in my mind. For a company that is seeking to take the whole market, 15% expansion is like, meh, like not bad, but you can do better. So if I saw something like a 20-30%, like that would be like, okay, we are rocking.
Yeah, I agree. Go ahead, Amit. Move on.
Okay, so we are. I mean, that's pretty much the end of the podcast today. To be honest, we covered most of the main subjects. I'll have one. Go ahead, Arnie.
No, like where you are going to show a clip, right?
No, we don't have enough time for that because we're an hour in. So if anyone wants to watch the full CNBC podcast, you can check it out. I do have one quick question, but one really quick shout out. Then we'll do the quick question. Shout out to Doom Shalat. For those that know Doom, you either know him or you don't. Okay, so Doom Shalat has been commenting under my videos in 2021, 2022, pretty much everyone's Palantir videos, to be honest. This statement right here, Palantir to the moon. And I just remember in 2021, 2022, when I was making videos, and this guy, within 5 seconds, this was the comment. And I'm like, how is he always first? Why is this always the comment? And then it just became this meme. So now Palantir is literally, I mean, $100 billion is pretty damn close to the moon. Okay, maybe the moon is now 500 billion. The target keeps getting further, but it's awesome to see Doom here $100 billion later. So
without Doom, we wouldn't have the confidence to be still here.
Yeah, Doom to me is like Satoshi for Bitcoin. Like no one knows who it is, but like he's there, and he's
a good analogy. It's a good
he's
analogy.
that guy. He's that guy.
Yeah, I think he's the OG, but I have to say that Midwest cannabis has been like everywhere as well. So he's really taken up the mantle there. So they're competing a little bit for who's going to be first on every video with their comments.
Well,
shout out to
when
them,
you
yes.
had a comment both from Midwest Cannabis and Dooms Charlotte, you knew that that video was blessed.
That's how you know it's a big deal when Midwest and Doom are there at the same time. 100%. Okay, cool. So last final question I was going to say is just, I mean, we'll do a full earnings preview next week. So this is like 30-second answer from each of you. But do you think we go up after earnings or drop after earnings? Like gut feeling. What are you thinking?
If I just putting my technical hat on, we've been at over 70 RSI for literally 2.5 months. It's going to have to be a pretty flawless earnings with some serious growth, but projections to keep it going.
Okay. Matt?
I still think that, even at 35% growth, I think for some reason they could take that and hit that, and there's still a possibility the stock could go down, right? Even though I think that everyone's kind of pricing that in, for some reason, I kind of agree with Dom here. I'm not 100% certain, but to be very frank, the customer growth year over year has been absolutely phenomenal. So they could be
even if they pull
mid-30s.
back, it doesn't mean that it's bad. Like,
yeah,
honestly,
I would love it.
I
I would love, a 20% pullback. Also, a lot of puts in the 30s and sit on it. So anyway, that's my thoughts.
Didn't Nvidia had some drops after earnings?
Yeah.
Despite keep morning. So like from a as an analyst standpoint, I would say the estimates implied in the price are very high. Okay, so that like being a strict analyst, when you start seeing these numbers, it's like, okay, I would be cautious, and if there would be like a crazy run up, like I don't remember after Q1, I think it was,
It fell 20%.
That it fell to 20%, but it went up like 15%, like the 2 days before when we were in DC. So if like I think the question is, does the stock drop considering the price as of today? Because I see highly likely that in the last quarters, Palantir completely killed the earnings. So let's buy some call options to bet on the upside. So if this happens and many people now think, oh, I should buy a call option to bet on the upside, then the price would rise too much, and then we could have a drop similar to the Q1 results, which were good, but since the stock went up too much previously, then it dropped. So gut feeling, I'm positive, especially on how much the company, the management can now control the narrative. They are in the perfect position to essentially tell the story backed by the numbers. So that makes me very confident.
As you mentioned, the actual estimates by analysts for the quarter are relatively low, so I don't really doubt that we will beat those. But the price implied expectations are like super high. For the last quarter, I would say that I was pretty confident in my prediction. I even made a video where I explained the narrative of the strong increase in growth because the comp was weak. So I was kind of like, well, the market is probably gonna like this. But this one, like, it truly feels 50-50. I mean, I don't want to cop out and give like no real strong opinion on it, but it truly feels like 50-50. Like it could go either way. But if I had to lean one direction or the other, I would say it's likely to drop in the short term, like pretty much regardless of what they report. Outside of something like, yeah, there are going to be comments like, oh, you're such a bear. But as we all mentioned, like, we would love to see a drop in the price. Probably pretty healthy. But yeah, I'm leaning towards a drop unless they report something like 35, like something outrageous. But likely, the expectations implied in the price are just too high at this point. But we'll see.
Before Amit jumps in with his thoughts, I just want everyone to remember, so some of the revenue and income comes from net interest income from the $4 billion, but we didn't really get a cut until mid to late September. So I would say you still almost have 3 months of the quarter almost at pretty much the normal 5.5% rates. But that's something to think about for net interest income and income as you go into the fourth quarter and later on to 2025. But for me, I still think we're going to be over 35% cash flow margin, which if you start thinking about the numbers that we're going to start generating in the next 2 to 3 years, that price to cash flow from operations is just going to get chopped. So Amit, loving and looking forward to what you had to say.
Yeah, my thoughts are quick and then we can end it out. I think we're going higher. I think the narrative is there. I think the momentum is there. I think NVIDIA is getting ready to crush. Look, do I think 50 is justified even with 35% growth? Probably not. Like even 38, 37 is. I think Amir did a great valuation model video. That's kind of what you imply when you have 35% growth. But I think the momentum will be there. It'll be exciting. I think the narrative will be Palantir continues re-acceleration of growth, and that along with a November, December potential bull market run to end the year once the election's over and when NVIDIA crushes. Again, NVIDIA is only valuable based on the software that is produced from the hardware, and I think all of that money is going to go into a company that's re-accelerating growth, and that narrative will be there. But if it drops, I don't think any of us will care because even if it ends the year at 35, that's fine.
I could easily see that as well, Amit, because these guys literally will come out with a brand new leg of business, in a quarter, right? And they might have a demonstration about warp speed. They might have, and some people that might blow people's minds. So there's literally anything that can happen with this company. They're literally coming up with new ways to generate great business outcomes every single quarter.
Regardless of what happens in after the quarterly results, this is really bullish for the ex-haters out there. If Palantir increases and keeps going up, you'll see more of the memes throwing.
Yeah, Chris, where you at, bro?
Throwing this book into the dustbin, and they're gonna engagement farm like crazy. Even the 100 billion today, you started to see I don't get how do they get so much engagement just from
There's a lot of people that don't want Palantir.
And win, if it goes down, they're gonna engagement farm see, I told you. So regardless of what happens, this is really bullish for the ex-haters and the engagement farmers.
The player haters.
Can you share the screen, please? This is exactly the meme that Emir is referring to. I confess I'm supporting the memes because I think it is right what Karp says. The more people just comment, but Palantir is overvalued. It's overvalued here, bubble there. People don't pay attention to the things that matter. And as long as this happens, and the clients do care of the things that matter, there will be a huge asymmetry between what Palantir delivers and the perception that just focuses on Palantir $100 billion market cap, not deserved, blah, blah, blah. And then in a few years, they will feel as stupid. It was right in front of my face and I didn't want to now it's always expensive at 40, 50p in a regular P.
I agree. And I think a lot of these people are finding interesting ways to hate on the fact that Palantir is at these levels. But I think that's why that Karp rant was needed, right? We needed him to come out and kind of, because he didn't really address the fact that the stock is $100 billion market cap, 45, literally. But the way he was talking was an implicit understanding of him saying, all of these people keep talking and we keep winning. And this is my response. And then you get on a 3-minute rant for him to say what he has to say. All right, that's it for us. Thank you, everybody, for being here at Palantir Weekly. Next week will be our earnings preview of what we've got going on for Q3. And then November 4th, we have earnings. And we will see if Palantir can continue and maintain their momentum. Thank you, everybody, for being here.
It's going to be a wild week that week for streaming.
For America.
Yeah. For America.
Yeah.
Go vote.
Yes,
go vote. 100%. Everyone's Twitter is in the description, so you can check them out there. Thank you, everybody. See you guys next week.
Thank you, everyone.
Bye, everyone.